Is Greece affecting our markets?
Certainly it is a bit. I think over the last couple of weeks, we've certainly seen a transition from Greece to the China news story. But again, I don't think it's at no point has this been, sort of a tragic exportation of risk off into our markets. Sure, we're off our highs for, but what, 3.5%, 4%.
We're trying to be a little different this morning than Greece, China, Greece. Do you maintain your outlier bullish call?
I do, with a couple of caveats. Here we are, halfway through the year right now, and I'm at 2350 for the year end, on top of the street, I think, per your consensus forecast. The big, sort of elephant in the room is earnings here, and getting back to not a great earnings trajectory, but a steady, decent, mid-single-digit earnings trajectory. One thing I am sensitive to is this recent oil sell-off. If we see continued weakness in oil, that's going to weigh on the energy sector's earnings into the back half of the year.
Yeah, but what's it do to the rest of the market? I mean, we've got a massive commodity deflation in the world. If oil joins the party, that's got to be good for your world, right?
Well, it's good for parts of the for the world. Certainly, Europe is more of a net beneficiary of lower oil than the U.S. is, simply because they don't have the E&P sector that is ramped up so aggressively as ours has. But, companies like Chevron, companies like Exxon and Schlumberger and so forth are very, significant contributors to overall earnings for the U.S. stock market. And I was, hopeful that if oil could stay, 60 plus, 60, 65 or so for the balance of the year, that these companies would handily beat in the second half. If we see continued weakness in oil, that may be an emerging bear argument for U.S. equities. I
like that phrasing, though, if oil joins the party. I mean, oil threw this party. Everything else joined oil. The thing that we've been tossing back and forth all week is which is the bigger story, Greece or China? And when you look at commodities, prices over the last 48 hours, even though equities have recovered in China, is it safe to argue that China is the real, that may actually have consequences?
For U.S. equities?
For us.
Look, it's always a risk you have to manage. But look, China, we've had a sort of a retail engineered stock boom and sort of like clockwork. It is just rolled over like just some mid cap stock that got overly built up on retail sentiment. I'm not really too worried about that, and I'm not necessarily sure it's the biggest indictment of the Chinese economy either. So I don't, the global growth profile you have to look at. But I'm not so. The fact that investors in China are losing money, I don't think really flows into our market.
I mean, we got Chris Casanti coming up in the next hour. We got Purves as a strategist, folks, and Casanti with real money at work with a fabulous recent track record, which gets us to the advent of earnings season. How do you dovetail revenues and earnings into your call?
Well, right now, I've part of my call has been not to expect great earnings growth this year. Really, 6-7% earnings growth and another chunk of PE expansion, as we've had over the last 3 years against a backdrop of sort of steady and managed low inflation, low rates. Right now, the second quarter overall should be set for some decent beats here. After Q1, companies got very conservatively on both FX, because large companies were getting beaten up on foreign earnings, and also on lower oil. So I think in Q2, those are easy beats. What the forecasts are going to be coming out this season will be very telling.
Okay, quick, Coke or Pepsi?
Pepsi.
Okay, here's my problem. Coke or Pepsi, I don't have a choice. I don't care. That's the issue for Pepsi. I don't care.
Pepsi. Yes.
No, it's true. No one cares.
Tom does market research with N of 1.